you can see we have a new backdrop. So maybe we'll do an office tour one day lah, right? One day.
Yeah.
Okay, but today we're back to talk about another topic that
Yes.
is very frequently asked, which is, should we buy now or wait? Right? Wanna share your thoughts?
Yeah. Today we have a magic one some more. Try new stuff lah, huh?
Yeah.
The question is, of course, everybody is thinking the price is very high right now, and whether or not we should even buy now or should we wait? And honestly, what are we waiting for?
Yeah.
When we say wait, what are we waiting for? Hoping that the price would stabilize or hoping the price would go down. So this is the biggest question, right? Of course, we are not some fortune teller, right? We can't tell you, but we can only base it on certain facts and figures lah.
Yeah.
Okay, I'll let Janice start. There you go.
So formal.
Yeah.
Okay, so I think for us, we would like to look at numbers, right? In terms of what's available in the market.
Correct.
What's the supply, the demand, and I mean, right now, what we know is that supply is really very limited. Demand is really at an all-time high, so that's really driving the prices up now. So yes, we recognize that prices are very high now, but at the same time, we also see that we feel, oh no, should I just say feel?
Think.
Okay, yes.
Feel also lah. We feel.
But or what we know is that there are certain things that will keep prices where they are, right? You want to share what they are?
Okay. So first of all, I think we must understand the supply and demand, like what Jenny said, right? We are currently at an all-time quite low lah. I wouldn't say like super all-time low, but stocks are clearing out. That is a fact. Nobody can deny that. Coming from all the reports that we have seen so far, and right now we are moving into a situation where we are. There's a few uncertainties in the world, like war in Ukraine, and of course inflation, and then of course interest rate, and of course the economic situation. We don't know what's going to happen, right? US and the rest of the world. So I guess people are also trying to put their money into real assets and not in other investment vehicles. They rather hold on to property in Singapore, primarily because Singapore is known as a safe haven also, right? Economically, our fundamentals are pretty good, and we have a strong government that has been has been pushing its economy very well. So I think that's also one very big factor why people are choosing to buy now instead of just wait. Yeah.
And I think another thing that we also like to look at is also in terms of the oil pricing that we have, right? Because these what's available in the market now is based on land that has been sold 2-3 years or even earlier, right? And if you look at all the new GLS that's coming up, those will be the new pricing for future launches, right? So what we are trying to take advantage of would be the oil pricing. Yeah.
Oil pricing also, of course, like you say, the land price, right? The land price itself is going up. Land is as a commodity, is a scarce commodity in Singapore. So naturally, they tend to go up in prices as we move along. You'll see some background lights happening.
Disco going on.
Disco, yeah. Sunday chit chat lah, huh? Let's keep it informal. Apart from which, also the construction cost. We know the construction cost is going up. We know the material cost is going up. So those add to the rising price of a property, right? So that's something that's beyond our control. We are a price taker. We don't produce any of this. We import down to the last nail. Also we import, right? So those factors must be taken into consideration when we are trying to figure out whether a price will go up or down. right? And yeah, the next thing, Janice, this
Yeah.
one very close to your heart.
Very close one. I think okay, we need to look also at developers' margin. I think in the past when land prices were cheaper, right? I think we've seen some numbers where the developers were really able to make very good margins of their sales, and we can see right now that it's actually getting smaller and smaller. But at the end of the day, right? I mean, these developers are not here to make charity, right? To give out free homes to everyone in that sense, right? After factoring marketing costs, development costs itself, labor costs, construction, everything is up. So that's why we also expect that developer will have to maintain their margins, even as everything is going up. And at the end of the day, yes, that pricing will be passed on to consumers, us, right? And so what we see is that, probably with the same budget, you'll be buying something smaller, right? Maybe a year or two ago, with a 1.5, you can easily get a 3-bedder. Now we'll be looking at a 2 or 1-bedder, right? And then, what next? So I think that's why a lot of people are really looking at entering now before you get completely priced out. Or just be left with very limited options.
Correct.
Yeah.
Correct. And then of course, having said all this, let's not forget that in 2017 and 18, when the land, the GLS wasn't able to provide developers with the necessary land that they are seeking, what happened was the developer went onto the en bloc market, and there was a huge en bloc thing going on in 17-18, right? We are talking about $8 billion, billion, right? Billion here. $8 billion worth of money coming into the real estate. Of course, not all of them come into the property sector, right?
Yeah.
Some of them probably they take the money and then they retire. But people still need a house. The house factor is still there. They still need a roof over the top. So there will be somewhat of this money channeling into the developments today. Still channeling into the developments today in one form or another. Because there's other factors that contribute to the why are people buying now instead of going to the wait and see route. Right. So just now we were talking about the why buy now, why are people buying now, right? Now we want to talk about how and what are they looking at.
Yeah.
Right? Janice will bring you through
So yes, there are 3 main things that we will look at in order to go into the property investment or any property purchase with confidence or more confidence. Even in this market, right? So the first thing that we'll look at will be the entry price.
Yes.
Right, how much are we paying for versus how much the developer paid for, right? I think that's very important because we need to know how much they are pricing above the land cost or just cost in general, and also then it's also like thinking about that runway, right? How long are we going to stay in that property before we would eventually exit,
Right.
So I think like this could even be an entire video on unit selection or what is a safe entry price. How do we analyze that? Because I think one thing I would like to stress a lot is that it doesn't mean that if you go into a sell out development you would definitely make money. It really depends on how much you paid for that unit versus your neighbors. There's so many other factors that we look at. So I think that can be another video. But I think the second thing that we also look at will be the development itself. I think this is something that I guess a lot of people will talk about, right? Because there's like, people will push about, this and that. But yes, this does play a factor as well. So we don't want to discount that. Looking at the development, whether it's a mixed use, it's an integrated,
schools,
yeah.
whether or not there's the school nearby, the transformation factor, the MRT factors, all this does play into it. Even down to the plot ratio, a plot ratio between you and your neighbor, whether or not it's going to have another, very tall building coming up right next to you. So a lot of information are available, but is trying to make sense of it. That is the key thing here. Trying to make sense of it. How do you make sense of it, and what do you make out of it? That will help you make that decision whether or not the development is something that you can go into, and then, like what Janice says, which unit then should you select, right? So first thing, entry. Second thing is the development itself, and then of course finally is your exit plan, right?
What is our overall big picture plan, and where this particular purchase is in this big picture plan.
Correct.
So that we know, okay, when it would be the right time to exit. We need to look at, what's the surrounding kind of like competitors, how they're doing, what's the demand, who are we going to sell it off to, and what will be the right price.
Correct.
For us to then move on to our next goal, and don't miss the boat, essentially.
And again, it's not about timing the market. It's making sure that when we already plan it ahead, so that we can be less emotion when selling it. We know exactly why we are doing it. Very objective, and then what will be our next step after we exit. Yeah, so these are the few key factors. Maybe Janice, you want to summarize again?
Yeah, so the 3 key factors that we look at, firstly, will be your entry price, how much you are paying when you are making your purchase. And of course, this one we really can go a lot more in depth into. Secondly, would be the development itself and the surrounding, the transformation. And then thirdly, will be the exit strategy, knowing when would be the right time to move on to your next pot of gold. Yeah.
Okay, so now that we have talked about all the why buy now and the how and the what, but seriously, is that all we need to know? Actually, no.
Yeah.
The first step for us is actually to figure out something closer or something more private. It's actually your financial status, or we do our financial due diligence with you first. This is where we get very personal in terms of figuring out what's your salary, what's your commitment, where
Lifestyle.
are you in your lifestyle or life stages, right? And how do we propose something that will minimize the impact to your current lifestyle or to your current financial commitment.
Most importantly, it's also having a very structured system, which is our RAM, right? Risk assessment management, where we will know exactly your safety net.
Correct.
Right? How much do we have to tide us through uncertain times, so that even when the market changes, market moves, we are still on track in our journey. And also knowing, I guess, like what's our buffer, right?
Buffer, not only just buffer, also whether or not we are able to sustain buffer being one portion of it also, but the other one is also looking at the numbers right from the start and being comfortable with it, being able to commit to it and say that, hey, I think this works for us, or if as your realtor, we look at it and we feel that it's too risky, then we have to be the one that stop you from proceeding, because ultimately, if it's too risky for you, then what's the point of going on forward? We have to restructure it, relook at it, plan out something else.
Yeah, I just want to end off by saying that, honestly, I've not had a client say that they have regretted entering the market 5 years ago, and in fact, right, most of them have said that they wish that they entered earlier. So that's where we kind of want to
Share
Correct. Where it's really not about timing the market. Yeah, we want to have spending time in the market, right? To make sure that we will be able to progress ahead towards our ultimately retirement goals. I think that's what we are all looking towards.
Two things for sure. We know for a fact, inflation is always going to be there. Second thing, you will age. The older you grow, well, we all grow old. Like the as we age,
Sadly.
right? Yeah. As we grow old, it gets more difficult in terms of not just with the loan bit, right? You want to change your habit, it gets difficult when you're older. You want to change your lifestyle, it gets difficult when you're
More
older.
commitments.
You have more commitments as you age. So instead of just sitting on the sideline and figuring out whether I should or should not, I think what we're trying to say here is look at the numbers and figures, look at the risk factor, right? Everybody's situation is different. It can't be that you just rely purely on your colleagues, your friends, your parents pushing or their way of doing things, and then you follow suit because it may not necessarily suit you. So yeah, hit us up lah, talk to us. Happy to have coffee and cakes as usual, and share more about this whole thing about getting your first or doing your investment, real estate or property lah. Okay.
Yeah.
Hope you enjoyed this. We'll try, like I said, we try to keep it short. It's Sunday talk.
Sunday chit chat.
Sunday chit chat. Yeah, we'll call it Sunday chit chat. Yeah. So have a happy Sunday and have a great week ahead. And bye bye.
Thanks for watching. Bye.